Expert technical analysis and market-related news begins in 3, 2, 1. Good morning, traders. Welcome to the Pirate Traders Morning Show. My name is Charles. Today I'm joined by Paul. How you doing, Paul?
Good morning. I'm doing well.
Let us know this morning if we have any technical difficulties, if you can't hear us or see us or whatever, because we're trying some new software out, and so we may make some mistakes. But anyway, let's start off by diving into the TA. So we will start with my screen. And what we are looking at here is the ES on the market profile chart. Okay, people have been asking me in the comments section, what is market profile? Why is it better than candlesticks? What's the dealio? Well, basically what market profile lets us see, which is different than the candlesticks, is what price level the market spends the most time and brings in the most volume. Okay, that is different than a candlestick, which just shows you over a given period of time what price levels were visited and how much total volume was traded during that period of time. We don't really care when the market trades. We care about where it trades because that's where we want to look for opportunities. So one thing that I was talking about all last week, and it is going to be the subject of my TA this morning, is the market being pinned. So when you just look at the candlesticks, let me pull up a candlestick chart real quick. Doobie doobie doo. If you just look at a candlestick chart of the last week, you can tell the market's pinned without a doubt. You can see that the market's just been going sideways in this very tight range. You can understand why it's pinned. You can see that the market had a bunch of momentum to the upside. It needed to spend some time balancing off that momentum, cooling off for a little bit before it was ready to either take the market higher or lower. All of that can make sense to you. But how do you know what is that pinned level? How do you know where the level is that the market is, is going to keep coming back to again and again because it's stuck to that level? Well, when we look at the market profile chart, it's instantly clear. Why? First off, you can look at the cumulative volume over here on the left. Okay? That is the area with the most volume traded. That is the first thing that catches my eye. The second thing is areas where the market reverses over and over again and where the market spends a lot of time. So if we look right here, reversal in here, reversal in here, reversal in here, spends a lot of time. Reversal in here, passes right through there with some single prints, spends some time. Spends some time, spends some time. Reversal here, reversal here. Okay? So we can see all these things, as the market gives us its first signal that we're going to start to balance, as it gives us our second signal of creating a balance area high. When it doesn't make it to a balance area low, we know something funky is here. The market is likely pinned, and we can just look for that area where the market spends the most time and brings in the most volume, and we can say that is probably the pin. Well, that was super helpful in the days ahead, right? Because once we knew on 8/27 that the market was pinned, on 8/28 as it was going lower, what were we saying in the Brigade live streams? Well, that the market's likely to come back to the pin. What did it do that night? Came back to the pin. The next day, when it tried to go higher, what were we saying? It's probably going to come back to the pin. What did it do? It came back to the pin. When it tried to go lower, what did it do? Back to the pin. And now at the end of the week, Friday, and I include the trade that happened yesterday because that was just like a futures market open for a few hours while the regular market is closed. I consider that all part of the weekend. So what happened Friday and in the weekend? The market tried to go higher, and what happened? Boop, boop. Here we are, right back at the pin once again. So I have the pin marked as 56.35. Okay, that's not an exact number, like it's literally that exact number, but it just gives us a general idea of every time the market tries to move away from this range, where does it get pulled back to? This pin will continue as long as it needs to. The market will continue to balance until one of two events happens, which is either the market starts to break lower, in which case it will liquidate and likely head down for the gap at 54.88, or the market will break out to the upside, in which case it will likely come back down looking for support around these highs, somewhere around 56.60, okay? If it finds that support, new all-time highs. Okay, that's what this balance is doing. That's what the market being pinned for this long is doing, is it's building up tension in the market for the market to be able to break one way or another, whether it is to the upside or the downside. Okay, so this morning, my focus on the ES is simply what happens in relation to that pin. I assume that today we are either going to go visit Friday's high around 56.65 or Friday's low around 55.95. We're going to head to one of those two. And then what happens when we get there? So when the market opens, does it start to create momentum up? Great, we're heading for the high. Does it start to create momentum down? Great, we're heading for the low. And then what happens when we get there? Do we just look below and fail, or do we get new selling? Do we just look above and fail, or get new buying?
Another way of thinking about it, or at least a way that broadens that, is thinking about how Friday was an option expiration for futures on a weekly and monthly for end of month, but which also means all of the stocks that had contracts written on them. Because it's amazing to me seeing how the market went out and went above Thursday's high and then drove down and went below Thursday's high. And that allowed market makers who had written all these contracts, not just on futures, but on the underlyings, to collect their premiums and cover them out that way. At least that's the thought.
And it's exactly right. You know, the market makers who sell options and the large players who use options to hedge, their long portfolios, they like the options market to stay in a range on that options expiry Friday, especially if there's multiple big options. Like if you have a triple witching or something like that, where there's like weekly options expiring, monthly options expiring, quarterly options, the more there is, the more likely the market's going to stay stuck in a range. And so usually what we get is a tight range. We get a really small little range, and that Friday is very, very boring because they don't want the market to make crazy moves one way or another because they're trying to roll their positions over, and they don't want to deal with huge changes in the deltas and stuff like that. So they want to keep everything kind of in a tight range. But this Friday was different. This Friday was unique because it was the Friday before a 3-day weekend. So a lot of the larger players just weren't there. They weren't, day trading in the market. They weren't any positions that they wanted to set up. They would have planned it all out on Thursday. So there was much less liquidity in the order books as normal. So what did you get? Big moves, which you do get when there's thin liquidity and there's no resistance in the market. You do get big moves, but then what did those moves do? Come right back. Yeah, because, they didn't really want to break the previous day's range. They made their decisions about what they wanted the market to do and how they wanted things to be priced inside Thursday's range. And so the market stayed inside Thursday's range. It's a great observation.
And I don't know if this is more about warring clans, whether or not it's the big houses against the hedge funds. I just don't know who all the players are, but it seems like it's multiple disparate groups. It's not like the conference call that the rest of us don't get into.
100%.
It's disparate groups that take a run and see if they can get it done.
Yeah, there are certain behaviors that the market does, and everyone knows about them. So everybody capitalizes on them because everybody's aware of them. But push come to shove, every day the market is competition. The big guys, the little guys, the market sellers, the people that sell options, they're not making bets about what the market's going to do. The hedge funds are, right? They are making bets. They're guessing. They're using their fundamental analysis to give them an idea of what they think the market is going to do. And then they're making bets based on that. But they're competing against the market makers who aren't making bets. They're just selling whatever people want to buy and then hedging it. So it's
they're just rolling. They're taking in their 2 or 3% a month, which is their objective.
Yeah, and they have enough size that they will never get completely destroyed unless there's some major economic event. You know what I mean? You have a 9/11 or whatever, then they get fucked. But otherwise, they're hedged enough that they're safe. So anyway, a lot of push-pull there. And then the last thing I want to mention, since you brought up the options expiring, so coming into the next week after a big options expiry, if the market has been pinned, it will often be able to break out of that pin the next week. I would add to that the fact that it was a holiday weekend. So everyone's back at work. They're well rested. They're ready to start making some money. So the market can definitely make a move today or tomorrow for sure. All right.
Well, we seem to have a double. Are we doubly heavy? We got two bulges on the overnight. What's that telling us?
Just, a slightly time difference. The market was rotating. Let me expand it out to see exactly. Expand the profile. Yeah. So it's like Asia was trying to just balance in the upper end of yesterday's range. They were trying to balance in the spike up. If you look at the low they created right here in the O period, that was basically the base of the spike up from Friday. So Asia wanted the market to basically just balance inside that range. And then I'd be willing to bet this area up here is probably right when London opened. And then they were like, we're going somewhere new. And then once they got back to that pin, market started going sideways once again. So
would you say then Europe is net short, appears to be short going into the open?
100%. Yes, I would. I would say the entire overnight inventory is net short right now.
Okay. Cool.
But again, that doesn't mean the market can't go down. I will still, I'll still be monitoring just to see which way it breaks. As a matter of fact, you could pretty much just use this big node right here. If you wanted to have a tight chop zone, you could say if they break above that node, we'll say 37, 56, 37, and find support, they're probably going to test the high from Friday. And if they break below whatever is the overnight low, and then they get continuation, they're going for the low. But it's tough when you're in the middle of a balance area. That's the thing. Everyone has a different opinion. Some people think the market's going up and going down, so we may need to play tug of war for a bit. All right. So, Paul, we talked about the overnight inventory. Is there any news that you wanted to cover today?
I can't say there's anything today that's going to move me. When I look around, I see everything is pretty much baked in. I don't see any breaking news that I think is going to be tradable.
Oh, fantastic. That makes it easier. We don't have anything to worry about.
Yeah, there's nothing going to report today that I think will move the market. And I don't think that I don't see anything for the next couple of days. I mean, Thursday's unemployment's really the next thing that I see that might move that's on schedule.
Perfect.
So that's what we got.
Well, then if we got a few minutes, why don't I put my chart back up? We'll take a look at the NQ. I'm sure you'll like to hear that.
That's great. Everybody will like it, Charles, not just me. I appreciate your concern. But.
Yeah. I'm always trying to keep track of who's NQ and who's ES. Yeah, so the NQ is in the same fundamental idea as the ES, right? It is a market that is in balance. It's not as clean to read as the ES because within that balance, they started to create momentum down last week, but they never really got the follow through. So if you were watching the channel last week, I don't consider this move in the overnight on 828 as being an actual gap fill to this old gap. So that means the market is still balancing using time, not price. I would say if they get below Friday's low today and they get new selling, they're going for that gap fill. So then I'd be targeting a move to 19,206 and monitoring for continuation lower from there. They could bounce and reverse back up. If they don't, then they're looking for a much bigger pullback in price, and probably both the markets will be selling off at that point. So yeah, I would say if I was trading the NQ this morning, I would be using this area between 19,624 and the overnight low 19,448 as a sort of chop zone, and thinking to myself, I don't really want to jump into positions right away. I want to kind of wait for more information. If I was a gambler and I had to get in a trade, the same way I talked about the ES, you got this little smaller node right here on the NQ between 19,524 and the low around 19,460. If you got above that and found support, you could take a trade to test Friday's high up there at 19,630. So you could look for that trade. But honestly, if it were me, I would be more patient and wait to break out of this chop zone, this bigger box, because they could flip and reverse anywhere in here.
Would you extend that box down to Friday's low?
Well, I wouldn't need to, because if they get below the overnight low, right, and they get resistance down there, we know they're going to Friday's low, okay? Because as you said, the overnight inventory is net short. The overnight opened up here. I don't see it actually on the NQ, but yeah, the overnight opened up here and sold off all the way down to here. So that tells us a majority of the participants from the overnight are short. So if they get below the overnight low and they get new selling, they have no reason to take profit. So any resistance below that overnight low is new sellers entering the market. So then you say to yourself, okay, overnight's not taking profits yet. We're getting new sellers. New people are shorting. They're waking up this morning and feeling bearish. Where are all of them going to start taking profits? In my mind, there's no reason for them to start taking profits until they get to Friday's low. So no, I would say resistance below the overnight low is a good trade to Friday's low.
Cool.
And then monitoring for continuation lower from there. Any requests from the chat? Charts you want me to look at? Good morning to Will, Knapp, Lewis, and Percy. Lewis says, I can't see the levels. Can you put it in text here? The important levels for today. I will read them out once more, but I don't really have a way to put them in text. So if we're talking about that tighter range of a chop zone for the overnight, I would call it between 19,524 and 19,448. That's like the tighter chop zone where I wouldn't touch anything inside of there because they're just going to go sideways. If they get above 524, maybe they're able to break higher. So it's worth trying to take the swing. But first, I'd have to see price get above there and see new buying. Why would that be a fair trade? Because then you're going to start squeezing all those overnight shorts. And then same thing at the overnight low. The larger chop zone, I would use Friday's high as that chop zone high. So pretty much between the overnight low and Friday's high, which is around 19,640. That's a larger chop zone. And you won't really know if the market's going higher unless it gets above there. But if the market gets above Friday's high and gets new buying, gets support, to the moon, baby. So you'd want to be bullish. And for the ES, I would call those levels, again, that tighter chop zone is going to be 56.37 to 56.26. And, yeah, whichever way it breaks out of there. Ooh, boy. Oh, yeah. That is too big. Whichever way it breaks out of there, it's likely to head either to Friday's high around 5,665 or Friday's low around 5,594. And we have a request for Bitcoin and a request for crude. Let's do it real quick. I'm talking about the Bitcoin. Man, Bitcoin has been in the longest range I've ever seen. Just look at this thing. It's
just as a side thought. You and I disagree on Bitcoin or on these cryptocurrencies, but gold used to be the currency, the cryptocurrency. People used to go to gold as an alternative to the dollar. So I kind of can think of it in those terms and accept it for what it is.
Yeah, a lot of people, one of the main arguments they make for Bitcoin is that it is a digital gold. So the idea is, why did you want to own gold? Well, one of the reasons anyway, was like if you ever had to flee your country, you could just grab your gold bars and put them in your pockets and make a run for it. If ever the government were to overinflate the money so much it wasn't usable, you could trade your gold. You could chip off little bits of your gold blocks and, take them and trade them for goods or whatever. That was the idea. Well, Bitcoin works the same way, only it's digital. So you don't have to carry these big, heavy gold bars around that can be stolen from you. If you wanted to, you can memorize your key for your wallet and then never need any physical thing, and no one could ever steal your money unless they convince you to tell them your key, which is just like a set of words that you have to memorize. So that's one of the ideas. The idea is that we now live in a digital world. The younger generation, my generation and those that follow, we don't live in a material world like we used to. We live in a digital world. We want digital gold.
I'm yawning.
Hey, man, whatever argument will get price to go up. That's what I say.
Okay.
I just want price to go up.
There we go.
But yeah, so Bitcoin is right now as a swing trader in just an incredibly difficult position. I have been looking at this over the last couple of weeks and getting really frustrated with it. Because basically there's two narratives that I could make. There's two arguments that I can make at the same time. I could make the argument that the market is balancing and it's building up steam for that, new break to, over six figures a coin. Okay. That it's building up momentum. It's building up steam, much like the ES has been for the last week. It's just rotating sideways over the last year, basically, building momentum and building momentum. It is something we commonly see in gold. But the thing that I don't like about the look of Bitcoin is that we are making, through this balance, we are making lower lows and lower highs. Okay. So the market makes a new all-time high. It pulls back down and makes a new low. Well, that's fine. They're buying the dip. The strong hands are stepping in. We're going straight to the moon, baby. But then, they can't get back above that all-time high. They take two pokes at it and they can't do it. Well, what does it have to do next? It needs a bigger dip. It needs to dip even lower to bring in even more discount shoppers. It's going to the moon, baby. They stepped in. And then what happens? Again, another lower high. Well, then what happens again? The market makes an even dippier dip the next time around. And then what happens again? Another lower high. So this is telling me that whilst I do believe long term, this market is building up momentum to break higher, we could still have some larger pullbacks before it's ready to do it. We just don't have those stronger hand buyers buying the dip just yet. Okay, so I could see a move down to this trend line that I've drawn here. Somewhere in the 50,000 range. I could see a dip down to there first before we really make a big break. I would not be buying Bitcoin right now as a swing trader for that larger move to the upside. Okay. So I just think with the corn, you got to wait a little bit. It's not ready yet. And then let's take a quick look at crude. But crude looks very similar. Balancing for a while here. So yeah, crude just dipped below this low that we had right here at 71.50. So pretty much I would use that low as a look below and fail level. If the market gets back above it, you're likely to get a little push to probably a trend line coming down here. So I would say above 71.50, buying is good for a move to 73.50 to test that trend line down. That is a strong trend line. Look at that. Whamp, 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 whamp. So I could see that. If you can't get back above 71.50, and you get new selling down here this morning, I would look for a further pullback in price. And I'd be saying something like 69.50 as a target to the downside on the crude.
Cool.
Any last words from you, Paul?
Well, I've always got a dad joke.
Oh, I'd love it. Hit me with it.
Well, my kids were asking me about the 9th letter of the alphabet. And, well, it was a wild guess, but I was right.
Well, what did you guess?
I.
Oh.
I. That's right.
Boy, that one went right over my head. Okay. It's good, though. I like it.
Oh, well.
All right, guys. Thank you so very much. And we will see you tomorrow morning. Thanks a lot, guys.
All right. Thank you. Bye-bye.
Bye.